Hey, it's Michael Robbins. Very early morning on June 16th. We are tracking market sentiment of COVID and in some way creating a historical record, as uh, this individual wrote um, back in 1919 about that epidemic. Facts unrecorded are quickly lost with the new interests of changing time. We have little left now beyond material statistics and vague impressions drawn from paper accounts. So that's kind of why we're doing this. um, have a we have a look at Market Watch, and you can see what we've gone through here. Um, the Dow made a pretty good recovery, and then we had a bit of a slip here, and you're still getting people on both sides of the fence predicting markets to come down even further, um, or continue their push forward. So let's uh, let's look what people are saying here. Um, Dead air. Yeah, I don't think there is really much on Yahoo Finance. So over on Seeking Alpha, why this could be a bear market rally after all, right? This individual believes that this improvement that we had was just kind of a short-term bear market rally, but you'll see he's not even so sure himself. Um, he gives out some scenarios. In a bullish scenario, it's going to go like this, but he says he's leaning toward a bearish scenario where things come back down again. The VIX here, this is a volatility index, so that has been creeping up again lately. It's almost as if this push and pull effect is going on with the market, and um, in response to COVID. It's not that bad. Oh yes, it is not that bad, and we go up and down. Um, I know this graphic is barely legible, but I was trying to look at how the market was performing um, during that last major epidemic, and this is between 1904 and 1929. So, perhaps it was in here a bit, and you know, this could be the reason we've had that. But of course, there was the war going on too, so that's a big impact. Um, So this is a big thing right here. The Fed's unprecedented stimulus, and I think we can see um, global stocks surge as Fed's corporate bond buying plan provides new juice. So, previous episode we were talking about how the Fed was allowed to buy some bonds, but not like directly buying the corporate bonds. And now that it is, um, that's why we might be seeing the futures pop a bit here. It was pretty interesting though. Yesterday, the direction of the futures did not uh, show where the market would end up that day. Um, so stock futures continue to rally following Fed's bond buying program. Um, So settled by individual corporate bonds as part of a previously announced program to keep lending markets running smoothly. So, yeah, that did a lot to kind of change the direction of the market. Um, but we're still getting people on both sides of the fence. So, um, right. So futures were down on the night before, and it just kind of recovered that through uh, the Fed's move to buy those corporate bonds. I I don't know how much. I don't have a strong opinion on that right now. I think that Um, the the bears suggest that um, we are far from out of the woods, and they do have some facts behind that. So, um, Washington State, where I am, has been pretty good at flattening the curve. But a few weeks ago, this line was continuing to come down and flatten out. This ramp up here is kind of new information, and um, some have said that it's not so much due to protests, but from opening things up too quickly, or for people putting their guard down. Um, but that, yeah, that's not nice to see. So yeah, that's kind of where we are today, and we're still just really hanging out, kind of in the middle of these trading ranges, and the market's going to be responding to public policy and different approaches. Are we going to consolidate and move up, or are we going to get slammed? I mean, was this the headline? I thought it was on Seeking Alpha, basically saying like this is your last chance to get out. Um, the bull market's over. Time to sell the rips, not buy the dips. Um, yeah, I'm not seeing that headline here. Um, but yeah, props to Traders Magazine. They were saying, I believe it was March 20th. They said, no, don't buy into it. Don't buy into it yet. We're not done. And yeah, sure enough. Wow. Catch you next time.